Can a single device really predict every major Bitcoin move and change the market forever? Right now, it's signaling a critical moment that could reshape everything. This isn't speculation. It's a proven system that could transform how you understand and trade Bitcoin. Watch this closely. Chapter 1. The Bitcoin device that predicts every major move. Since Bitcoin's inception, its price has followed a remarkable rhythm, a pattern so consistent that it almost feels like a machine is at work behind the scenes. This device is known as Elliott wave theory, a market analysis tool that decodes the hidden psychology driving investor behavior. It reveals how waves of optimism and fear repeat in predictable cycles, shaping Bitcoin's price movements. Today, we stand at a pivotal moment. The final and most volatile phase of this cycle is unfolding. This phase could either propel Bitcoin to unprecedented highs or mark the start of a profound correction. Understanding this device is crucial because it offers a roadmap through chaos, helping us anticipate what's next in Bitcoin's journey. Chapter 2. How this device called the 2022 bull run. Let's rewind to 2022. At that time, many investors were unsure if the bear market was truly over. Using Elliott wave theory, a clear forecast emerged. The bear market was ending, and a new bull run was about to begin. This wasn't guesswork. It was based on identifying the completion of corrective waves and the start of a fresh impulsive wave. As the months passed, Bitcoin's price waves unfolded almost exactly as predicted. The price moved from the lows near $17,000 in late 2022, climbing steadily through the first, third, and fourth waves, confirming the theory's accuracy. This track record builds confidence in Elliott wave as a reliable device for understanding Bitcoin's complex price action. It's not just theory, it's a tested framework that has anticipated major market turns with impressive precision. Chapter 3. The 3 immutable rules behind the pattern. What makes Elliott wave theory so powerful and reliable? It's governed by 3 strict rules that every wave structure must follow. First, wave 2 can never be retraced beyond the starting point of wave 1. In simple terms, after the initial upward movement, the market won't fall below where that move began. This rule prevents the pattern from becoming invalid. Second, wave 4 must not overlap the price territory of wave 1. This means the correction in wave 4 stays above the peak of wave 1, preserving the integrity of the trend. If wave 4 dips into wave 1's territory, the wave count needs to be reconsidered. Third, wave 3 is never the shortest impulse wave among waves 1, 3, and 5. It's typically the longest and strongest push upward, often driven by increased market participation and momentum. These rules create a mathematical structure that guides the market's rhythm. Visualizing these waves is like watching a heartbeat. Each wave has a purpose and place. This structure is why Elliott wave theory acts like a device reliably predicting where Bitcoin's price is likely to head next. Chapter 4. The final 5th wave. Right now, Bitcoin is in the decisive 5th wave of its current cycle. This wave is critical because it often represents the last euphoric push before a major market shift. The price action in this phase can be explosive, driven by a mix of hope, speculation, and sometimes irrational exuberance. However, this wave can also signal the start of a long-term downturn if it fails to extend properly or breaks key support levels. What makes this phase even more interesting is the divergence we're seeing between Bitcoin and the total cryptocurrency market cap. While Bitcoin has hit new highs recently, the total market cap has not followed suit. This divergence suggests Bitcoin is leading the market independently, beating to its drum. This leadership indicates that Bitcoin's cycle might not mirror the broader crypto market exactly, adding complexity but also opportunity for those who understand the wave structure. The 5th wave's behavior will tell us whether Bitcoin is gearing up for a historic peak or preparing for a correction that could reshape the market landscape. Chapter 5. What comes after wave 5? As Bitcoin rides this final wave, the big question is, what comes next? Historically, after the 5th wave, markets face 2 main scenarios. The first is a blow-off top, a rapid parabolic rise followed by a sharp correction that wipes out gains quickly. This often happens when market sentiment reaches a fever pitch and fundamentals take a backseat. The risk here is that investors get caught in a frenzy, pushing prices beyond sustainable levels before a sudden reversal. The second scenario is a sustained rally, where Bitcoin continues to climb supported by favorable macroeconomic conditions such as easing inflation, institutional adoption, or technological advancements. This path would extend the bull market and potentially set new records. To evaluate which scenario is more likely, we look at key economic indicators and market stress signals. Rising interest rates, geopolitical tensions, or unexpected regulatory changes could trigger a breakdown in the Elliott wave structure, invalidating the bullish scenario. Conversely, positive news and strong on-chain activity could reinforce the wave's extension. It's important to remember that Elliott wave theory is a powerful guide, but not infallible. External shocks or shifts in investor psychology can break the pattern. That's why staying alert, monitoring critical support levels, and adapting your strategy is essential as this wave unfolds. Chapter 6. The $75,000 line. Right now, one price level stands out as the most critical for Bitcoin's future: $75,000. This isn't just another support level, it's a make or break threshold for the current bullish Elliott wave count. If Bitcoin's price falls below this line, it would invalidate the entire bullish wave structure we've been tracking. In other words, breaking below $75,000 would likely signal the end of the current bull cycle and open the door to a much deeper correction or even a prolonged bear market. Why is this level so important? Because Elliott wave theory has strict rules about how waves must behave. The fourth wave, which came before the current fifth wave, set a low point near $75,000. According to the rules, the price can't drop below that low during the fifth wave without breaking the pattern. So, this level acts like a kill switch. If it flips, the bullish scenario is off the table. For traders and investors, watching this level closely is crucial. It's a clear, objective line in the sand that tells us whether the market's current momentum is intact or if the cycle is breaking down. Staying alert to price action around $75,000 will help you make informed decisions and avoid getting caught on the wrong side of a market shift. Chapter 7. Final bull run or calm before the storm. So, what are we really seeing right now? Are we in the middle of a Wave 5 extension, like those seen in commodity markets, where prices surge dramatically before a final peak? Or is this just the calm before a historic reset, a quiet moment before a major downturn reshapes the market? Bitcoin is famous for its volatility, and the emotional climate among investors is intense. On the one hand, the fifth wave often brings euphoric buying and rapid price increases. This could push Bitcoin to new all-time highs, potentially reaching levels many thought impossible just a year ago. On the other hand, history shows that these final waves can also be the most dangerous, as markets become overheated and vulnerable to sharp reversals. To get a balanced view, we need to consider both the technical data and the broader economic context. The divergence between Bitcoin's price and total crypto market cap, for example, signals that Bitcoin is behaving differently from the rest of the market. Meanwhile, macroeconomic factors like inflation trends, interest rates, and geopolitical risks add layers of uncertainty. Chapter 8. If you know how to use it. Let's take a step back and remember what Elliott wave theory is: a sophisticated tool for decoding market chaos. It's not a crystal ball that guarantees predictions, but a framework that helps us understand the underlying structure of price movements. Too often, people get caught up in hype or sensational headlines, chasing the next big move without understanding the market's rhythm. That's a mistake. The real power comes from learning to read the waves, recognizing where we are in the cycle and what to expect next. If you can master this device, you gain the ability to ride the waves instead of being tossed around by them. It's about strategy, patience, and discipline. This tool changes everything because it turns uncertainty into a map, guiding you through volatility with confidence. But remember, it only works if you use it wisely. Don't blindly follow hype or rumors. Instead, focus on the structure, watch the key levels, and adapt as the market evolves. Elliott wave theory is a powerful tool revealing Bitcoin's price rhythm. We're at a critical point, the final volatile wave. Whether Bitcoin hits new highs or corrects depends on key levels like $75,000. Use this device wisely, study the waves, avoid hype, and prepare for any outcome. If you find value in this video, make sure to subscribe and hit the notification bell so you don't miss future updates. Stay sharp, stay patient, and let the waves guide you. Thanks for watching.